What about this point? We keep creating these jobs. At the same time, we're not seeing it expressed in wage pressure, which is really affecting consumer spending and a lot of other things. What is going on with the U.S. economy?
Well, I think it's on pretty solid footing. And your point around inflation is one of the things we really focus on from the most recent Fed minutes. They're asking the same questions and seem a little less certain as to whether or not this is transitory. So you've had 5 straight inflation CPI misses. This is becoming, it's becoming persistent. I think it's being priced in, or it's pretty well priced into the bond market in terms of forward rate expectations. So we think this pattern is likely to persist. At the same time, it's not just the labor market where you're seeing strength at the margin. We've been encouraged by some of the better news around retail spending. Retail spending last week was actually quite positive. The same was kind of validated in Q2 GDP. Q1 GDP consumption was revised higher. So yeah, it looks like a good backdrop. And at the same time, I think expectations for where growth was headed, which were pretty elevated at the beginning of the year, have moderated a lot. So if you look at things like City Surprise, it's a much more upbeat picture than it was a few months ago.
So, Jack, give us a sense of what your dashboard looks like. We just heard, for example, retail sales were surprised to the upside. On the other hand, new homes were a surprise to the downside. Right. Sort of a mixed bag of economic data. What do you look at to really get your arms around the U.S. economy?
I think in terms of strategy, probably the most important data point right now is wage growth. If we're able to continue to grow our wage pool at 200,000 jobs, net jobs a month, and do it at a wage rate less than 3%, then I think this party can continue. Because the fact is that, as much as the Fed would love to see a smaller balance sheet and higher interest rates, they're not going to be able to raise rates at a trajectory that's higher than inflation, because they want to keep real rates not only low, they want to keep them negative. And right now, the last Fed hike moved in against this downtrend in inflation, and that's not part of their game plan. So I think that as long as inflation stays low and wage growth is the key component there, that keeps the Fed at bay.